Why use an LLC for non-recourse bridge financing? Pros, cons, and investor breakdown. Non-recourse bridge loans are one of the most powerful tools available to real estate investors. But there's one rule almost every lender repeats. Make sure you're borrowing through an LLC. In this video, we're going to break down exactly why an LLC is the preferred structure for non-recourse bridge financing, the pros and cons of using one, and how it protects both you and your long-term investment strategy. Let's start with the basics. A non-recourse bridge loan is a short-term, asset-based loan used to acquire or reposition a property. Investors use these loans for multifamily value-add projects, commercial repositioning, stabilizing distressed assets, refinancing out of hard money, or acquiring properties that don't yet qualify for traditional bank or agency financing. The defining feature of a non-recourse loan is simple. The lender's only collateral is the property itself. They cannot pursue your personal assets unless you trigger a bad boy carve-out, such as fraud or intentional misconduct. This structure is designed for professional investors, not consumers, and that's exactly why lenders want the borrower to be an LLC. So why do lenders require an LLC for non-recourse bridge financing? First, non-recourse loans are commercial loans, not consumer loans. Consumer protection laws don't apply to business entities, and lenders want to avoid the regulatory complexity that comes with lending to individuals. Second, liability must be isolated to the property. Non-recourse means the lender can only take the asset securing the loan, and an LLC creates a clean, isolated ownership structure that keeps everything legally separate. Third, underwriting is cleaner. Lenders underwrite the property's cash flow, the business plan, the exit strategy, and the LLC operating agreement. They do not want to underwrite your personal finances. Fourth, an LLC makes the foreclosure process faster and more predictable. If the deal fails, the lender forecloses on the LLC's asset, not on you personally. And finally, using an LLC protects you from personal liability. If the project goes sideways, your personal home, savings, and income are protected. Now let's talk about the pros of using an LLC for non-recourse bridge loans. The biggest advantage is personal asset protection. Your personal wealth is shielded because the LLC owns the property, not you. You also get a cleaner tax structure, since LLCs allow pass-through taxation and simplified accounting for investment properties. Operating through an LLC also gives you professional credibility. Lenders, partners, and investors take you more seriously when you operate through a business entity. Another major benefit is flexibility. LLCs make it easy to bring in partners, structure equity splits, create preferred returns, and build operating agreements. This is essential for joint ventures and syndications. LLCs also support portfolio scalability. You can create multiple LLCs for multiple properties, reducing cross-liability and protecting each asset individually. And of course, most non-recourse lenders require an LLC anyway. So using one isn't just beneficial, it's often mandatory. But there are also some cons to consider. Forming an LLC costs money, and depending on the state, that cost can range from very low to several $100s. Some states also require annual fees, franchise taxes, or renewal filings. You'll need separate banking and accounting for each LLC, which means more administrative work. You also have to maintain proper corporate records, operating agreements, and compliance documents. And if you invest in multiple states, you may need to register your LLC as a foreign entity, which adds another layer of complexity. None of these drawbacks are deal breakers, but they are part of running a real estate business professionally. Now let's look at how an LLC actually protects you when using a